Hello, and welcome back to Insight to Invest, the channel that gives you insight into a company and you decide where to invest to grow your money. What if I told you there's a profitable fintech company that processes over 10 billion transactions a year, is actively expanding into one of the fastest growing payment markets on the planet, has beaten Wall Street estimates for multiple quarters in a row, and you can buy the stock today for less than $30. Most investors have never heard of it. Finance YouTube barely covers it, but the numbers are real. The business is real, and the opportunity might be more interesting than a lot of what's getting all the attention right now. Today, we're talking about EVERTEC, ticker symbol EVTC. Let me break it down. EVERTEC is a financial technology and payment processing company headquartered in Puerto Rico. Think of them as the Visa or Pfizer of Latin America and the Caribbean, except they're not nearly as well known, which is exactly why this is interesting. Here's what they actually do. Every time someone in Puerto Rico swipes a debit card, sends money on a mobile app, or a merchant processes a payment, there's a very good chance EVERTEC's technology is handling it behind the scenes. They own and operate the ATH network, one of the leading debit networks in the entire region, process over 10 billion transactions annually across 26 countries. Their customers include banks, merchants, corporations, and even governments. Here's the key thing that makes EVERTEC's revenue model so attractive. Most of it is highly recurring. Long-term contracts with banks and financial institutions mean predictable, sticky revenue that doesn't disappear overnight. Now here's the real investment story. Because EVERTEC isn't just a Puerto Rico utility, they're in the middle of a major expansion into Latin America, and the timing is perfect. Latin America is one of the most underbanked regions in the world. Hundreds of millions of people are just now getting access to smartphones, digital wallets, and electronic payments for the first time. The digital payments market across Latin America is projected to grow at roughly 17% compounded annually through the end of the decade. That's not a small tailwind. That's a decade-long structural shift. EVERTEC is aggressively positioning itself to capture that wave. The Latin America segment grew 22% in 2025. In just the fourth quarter, Latin America revenue jumped 40% year over year. They have been acquiring companies in Brazil, crown jewel of Latin American fintech, including Tecnobank, which closed in October 2025, and Dimensa, which is expected to close in mid-2026. They just signed Banco de Chile as a new client. They're winning Grupo Aval Colombia. The pipeline, by management's own words, is one of the strongest they've ever seen in years. Brazil alone has a population of 215 million people and is home to Pix, one of the world's most advanced instant payment systems. EVERTEC is actively building connectivity into that ecosystem. Let's talk numbers, because this is where it gets really compelling. For full year 2025, EVERTEC reported record revenue of $931.8 million, up 10% year over year, or 11% on a constant currency basis. Net income came in at $141.6 million. They generated $227 million in operating cash flow and returned $82 million to shareholders through buybacks and dividends. 2026 management guided revenue of $1.02 to $1.04 billion, crossing the billion-dollar mark for the first time, with adjusted EPS growth of 6 to 9%. EBITDA margins are expected to stay healthy at 39.5 to 40.5%. The board also just authorized a fresh $150 million share repurchase program through 2027, which signals real management confidence. Now here's the valuation piece. The stock trades around $28, well below its 52-week high of nearly $39. Analysts who cover the stock peg fair value at around $32 to $33, with some more bullish estimates as high as $56. At current prices, you're buying a profitable, growing fintech at a significant discount to where analysts think it should be. Adjusted EPS for 2025 came in at $3.62. That puts the stock at less than 8 times earnings for a company growing revenue at 10% with a 40% EBITDA margin. That's a genuinely attractive multiple. I'll always give you both sides, so let's talk risks. First, customer concentration. About 29% of EVERTEC's revenue comes from a single client, Banco Popular, and EVERTEC already agreed to a 10% price discount on services to Popular starting in Q4 2025, which is a $14 million annual revenue headwind. That's a real concern. Second, currency risk. Latin American currencies can be volatile. While the Brazilian real actually helped results in Q4 2025, that can easily reverse. Third, competition. Outside of Puerto Rico, EVERTEC competes with global giants like Fiserv and a growing pool of local Latin American fintechs. They don't have the same moat in Latin America that they have at home. So it's not a risk-free story. No stock is. But for a long-term investor who believes in Latin America digitization, these are manageable risks on an already discounted price. Here's the bottom line on EVERTEC. This is a profitable, cash-generating fintech company with a dominant home market, an aggressive Latin America expansion strategy, and a stock trading at less than 8 times earnings while growing double digits. It's not flashy, it won't trend on X, but the fundamentals are genuinely strong, and the market is sleeping on it. If you're a long-term investor looking for a differentiated, under-the-radar growth stock at a reasonable price, EVTC deserves to be on your watch list. As always, this is not financial advice. Do your own research, understand the risks, and never invest more than you could afford to lose. If you found this useful, hit like and subscribe and drop a comment. Had you ever heard of EVERTEC before this video? I am genuinely curious. There are 2 other videos that YouTube thinks that you'll enjoy. I'll see you in the next one. Bye.